the tax filing season. I know many of us are done with our taxes, especially the individual taxes, but business taxes are still ongoing. In today's evening walk, I would like to talk about collection of errors and changes in accounting estimates and policies. There is a standard called IS 8, the International Accounting Standard 8. It requires us to be consistent in our accounting practices. But where there are changes, there is some way, there is advice on how we can deal with this. I'm speaking this because business tax is still ongoing and there are some areas to focus on here. And one of the areas is these changes in the estimates, errors to be corrected before we file these returns. Now, if there is a change in an estimate, we are going to apply this change prospectively going forward. It only affects the current period and the future period for a change in estimate. For example, allowance for doubtful debts. If you're changing on how to estimate that, you're going to apply it today going forward. However, if there is an error that was made in the reports, this error has to be corrected retrospectively. That implies going back, stepping back that particular year where you made the error, correct that error, and apply the changes retrospectively. Meaning you have to step back, then move forward. But with estimates, you start from there and then going forward. I know this is happening. If you make a change, you have to find out, is it a policy, is it an estimate? Was this error done only this year, or it was even done last year? The reason we do this, we need to provide room for comparison. There is no way we can compare where the estimates or where the policies or the standards are not the same. Therefore, you're going to apply changes if it is an error retrospectively, if it is an estimate prospectively, to help us have comparison and to help us have room for development. The most important thing here is to be consistent going forward. Thank you.